Leasehold, non-landed homes or units sold on the 99-year lease are seen to have outperformed freehold properties. That's according to a study by Cushman Wakefield based on the price indices of freehold and leasehold condominiums compiled by the Urban Redevelopment Authority. Cushman Wakefield says the weighted average price of leasehold properties have held up better, declining by about 1.4% since the third quarter of 2013. And when compared to the second quarter of 2009, when the market was at a bottom, they have climbed about 57%. Cushman also says that the price gap between the two segments has narrowed.
If you look at the Newton 18, which is a freehold property, as compared to its neighbour Amaryllisville, 99-year lease, if you compare the price gap between, say, the early days, 2002, 2003, the difference, the gap is actually about 35% or so. But in recent quarters, you actually saw the gap has narrowed to 15%, which means over time, leasehold project might actually outperform freehold project.
In recent years, curbs on loans, such as the total debt servicing ratio framework, have weighed on overall property demand. But Cushman says freehold projects are at a disadvantage because they are generally more expensive and require a higher capital outlay. Analysts say the price performance of leasehold and freehold properties also depends on the en bloc potential. Typically, freehold properties enjoy a higher price premium when the en bloc market is active. And according to other analysts, freehold properties continue to attract interest. Based on a study on caveats lodged, consultancy Knight Frank says the price gap between freehold and leasehold non-landed homes across Singapore has risen from about 33% in 2011 to nearly 47% last year. According to numbers from Knight Frank, the yearly prices of freehold units averaged at $1,532 per square foot in 2014, an increase of almost 10% year-on-year. However, those for leasehold units fell by 0.4% to $1,045 PSF.
Going forward in the next few years, as the government gradually release land sites, which are all leasehold tenures, the availability of freehold properties is slated to remain stagnant or in fact decline. So given that limited supply, I think that buyers will still have freehold properties as their first choice.
We look at only the resale and subsale market. If we look at the period in time, I think the gap has consistently been about 25 to 28% since the advent of TDSR. I guess if these measures are in place, perhaps that gap will always be probably maintaining at that 20+% range. I don't expect it to come down.
Analysts say it's important to note that transaction volumes in the last 2 years have been thin and could affect the overall data analysis. And they also say that apart from land tenure, other factors like location and features of the development also have an impact on home prices.